Welcome to AM Best Audio.
In the past, U.S. property and casualty insurers might have been breathing a sigh of relief if only one hurricane had made landfall during an entire hurricane season. While that was the case in 2023, inflation, rising reinsurance costs, and the increased frequency of smaller, more pervasive storm systems are adding their own volatility. I'm Lori Chortis for AM Best TV, and joining us now to discuss that is Dan Ryan, a senior director at AM Best, who was one of the key authors in an AM Best new review preview report on the U.S. property and casualty sector. Dan, so great to see you. Thanks so much for joining us.
Same here. Thanks, Lori.
So, Dan, how did the P&C segment perform overall in 2023, and what were some of the more notable trends?
Okay. Yeah, I mean, before we get into any numbers, I think I just want to say that 23 was probably one of the most challenging years for the industry as it relates to the things that you talked about, weather, inflation, and of course, changes in reinsurance behavior. But the one thing I think that stands out most of all as we were putting this report together was the change in weather and secondary perils being the highlight of the whole report. In 2023, what was unusual about 23 was the fact that while there wasn't a mega catastrophe, as you pointed out in your intro, there were a number of secondary perils, actually a record number of secondary perils that occurred in the U.S. As reported by NOAA. There were about 28 separate storm events with loss tags in excess of $1 billion, which tops even those that were reported in 2020 and 2021, and to a lesser extent 2022. So the pattern of weather is really one of these problematic areas that insurers and reinsurers need to find a solution for. It seems like reinsurers have already found that solution by increasing attachment points and leaving a lot of the onus and risk in the hands of the primaries. So that's the other part of the story too. When we look at personal lines, how much of the losses they picked up in 2023, which was disproportional relative to what we've seen historically. I think a lot of that came from reinsurance change in behavior since 2021, 2022, which sees these patterns as being a new norm. So along with that, the inflationary pressures is the same that we've talked about in previous years. And the inflationary pressures are much more pronounced with personal lines insurers as opposed to commercial. But nonetheless, it affects both. And the cumulative effect of inflation is really what is driving a lot of these loss costs. You know, as we've seen in 2021 and 2022, inflation was spiking at 40-year highs as a result of 8 and 9% in those years. Now we're sitting at about 3.5%, and it's still a problem because of the cumulative effect that insurance companies are working through. So it's going to take some time. So to get back to the original question about how the industry has done in 2023, from a quantitative combined ratio perspective, the industry came in at a 103.7, which was higher than the 103.1 that was reported in 2022. And a lot of that was related to catastrophes. Quantitatively, a $38 billion underwriting loss equated to probably one of the largest underwriting losses that the industry has seen in some time, maybe over a decade. So, and a lot of it was weather related, right? Didn't get into the number, but catastrophes and weather contributed somewhere close to, if you do the math, somewhere close to about 60 some odd $billion. So that really has kind of become the new norm.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Well, the report states that investments played a significant role last year in shaping year-end results. Do you see that role increasing or decreasing as we move through 2024?
I think it's a great question, and I think it will increase just because of the Fed's rate activities over the course of 2023, which insurers really haven't taken full advantage of. So we think that's going to happen. In fact, we think net investment income will be up by a good margin, somewhere close to 15% as a result of that, as new money yields get reinvested and produce higher returns. Looking back at 2023, it was not only a situation where insurers were taking advantage of interest rates, thank goodness, given the year that they had, but it was also a year in which they were able to pick up some of the losses that they incurred from an unrealized capital loss position in 2022, thanks to the run-up in the stock market in the latter half of the year. So overall, I think it was a good year investment-wise for PC insurers, and I think in 2023, not to forecast where the capital markets are going, but from a fixed income securities perspective, it looks like it should be another strong year, actually stronger than 2023.
So Dan, what lines of business are facing the most difficult challenges?
Private passenger auto is a line that's been troubled by post-COVID implications, meaning a return to more normal driving behaviors, inflationary pressures, and they've kind of felt the brunt of the inflation as it relates to auto repairs. On the medical side, on the liability side, you have medical inflation that plays a part in all this too. But you can see in the results and the hardships in trying to get rate relief that the private passenger auto line has been certainly one of the laggards. And for the industry, it represents 30 some odd % of the industry's premium. So a lot of what happens in private passenger auto finds its way into the overall PC industry's results. The homeowners line has been problematic for the reasons that we talked about a few minutes ago with respect to catastrophes and reinsurance. From a commercial perspective, the three lines, as I mentioned earlier, that are somewhat problematic are, the medical professional liability line, the commercial auto line, and CMP, because that's always a very competitive line of business. And again, all three of these lines, to some degree, are affected by social inflation and litigation financing.
Dan, always a pleasure. Thank you so much for joining us.
You're welcome. Thanks, Laurie.
That was AM Best Senior Director Dan Ryan. For AM Best TV, I'm Laurie Chortis.
Looking to get the attention of the insurance industry? We have the platforms to do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day, find out more by contacting our Advertising Services Business Development Team at 908-882-1706.